Hello, welcome back to Invest with Intention YouTube channel. If you are new here, welcome. I am on a mission to turn 13,000 into 50,000 by investing into ETFs, index funds, and high conviction stocks. And I am excited for this one today. Today we are comparing JEPQ versus JEPI, two of the best covered call dividend ETFs out there. The big question is, which one is the better long-term hold, especially in a brokerage account? I will answer that at the end, so make sure you stick around. I'll be using Portfolio Lab over here. Okay, so you can just see this right now. We'll come back to that. I'll be using that to compare their year-to-date return, 1 year, 3 year, and 5 year returns. And we will also break down dividends, taxes, and expense ratios. By the way, I only own JEPQ. Okay. Before we dive in, a quick thank you to my first 20 subscribers. I truly appreciate the support. And if you are watching and haven't subscribed yet, please consider hitting that button. It helps the channel grow more and reach more people. Okay. And also, remember, this is not a financial advice, it's just my personal journey. So please do your own research before buying anything you see on my channel. Okay, JEPQ is the JP Morgan Nasdaq Equity Premium Income ETF. Is designed to generate income by selling covered calls on the Nasdaq 100, giving you exposure to tech and growth stocks while producing high monthly income. Okay, and JEPI is the JP Morgan Equity Premium Income ETF. It follows a similar strategy, but instead of Nasdaq, it's tied more closely to large cap value oriented S&P 500 stocks, making it slightly more defensive. So both ETF focuses on income first, growth second. Okay, so let's start with my JEPQ position. So let's go over here. I started my JEPQ position, I believe, on March 18, 2025, so earlier this year, with one share, as you can see here. Since then, I have dollar cost average into my position. I bought one share. Some days I was able to buy 0.5 shares, zero point 0.5 shares, as you can see in April, right? And I kept dollar cost averaging one share here, 0.4 shares, 0.2 shares, right? It didn't matter how much money I had. I just kept dollar cost averaging with the amount of money I had. And right now I own 15 shares, as you can see here, with an average cost price of $55.32. Okay, the current price now sits at $59, as you can see, meaning I am up 6.78%. So not bad, not too bad, right? It's earning higher than I'll earn in a high yield savings account. So JEPQ makes up about 3.75% of my entire portfolio. So this is an income satellite position, not a core holding. I do not currently own JEPI, and honestly, I'm still undecided on whether I will ever start a position. Okay, but both JEPQ and JEPI pay monthly dividends, so which is great if you want income now. Let's go back here. They are able to do this through covered calls. It's simple. In simple terms, a covered call means the fund sells options on stocks it already owns. In exchange, they collect option premium, which is then paid out to shareholders as income. The trade-off: you give up some upside during strong bull markets, but you get steady cash flow. Okay, so let's look at the dividends and compare the expense ratios. So we'll start with JEPQ first. Okay, the current yield, as you can see, is 10.16%. Okay, and they paid out $6 per share over the last year here, as of December 1st. Okay, and the dividend is non-qualified, meaning they are taxed as ordinary income. The expense ratio for this, I don't think it showed here, but it is 0.35%. Okay, and now let's go and look at JEPI. The current yield is 8.12 as 12%, as you can see, and they paid $4.69, $4.69 per year in the last year. Okay, as of December 1st, 2025. They are also taxed as ordinary income, and the expense ratio is the same, 0.35%. Okay, so from a pure income standpoint, JEPQ pays more, but taxes matter. Okay, especially in a brokerage account. So we are going to compare their performances. So we are going to head over to portfolios lab. Okay, and we'll see that year to date, okay, JEPQ is here, up here, and JEPI is down here. Okay, so JEPQ year to date has returned 15.56% compared to 8.27% for JEPI. Okay, big difference, as you can see. Okay, 1 year difference, you will see that JEPQ has returned 14.82% compared to JEPI 7.76%. Those are huge difference, right? The 3-year return on average, JEPQ has averaged 25.32% compared to 10.14% for JEPI. And JEPI does have a 5-year return of 9.80%, but JEPQ hasn't been around long enough to compare at that time frame. Okay, across every comparable period, JEPQ, okay, has clearly outperformed JEPI, okay, and by a wide margin. So my final verdict on this: which one is the better buy? Both ETFs are solid options for income-focused investors, and both can absolutely play a role in building wealth. So let's go back here to my portfolio. Okay, but if I had to choose one, I am going with JEPQ. Why? Because JEPQ is tied to the NASDAQ 100, giving you exposure to tech, growth stocks, which offers better long-term upside than JEPI's more like value tilted approach. Okay, that growth exposure is exactly why I own JEPQ. Okay, and not JEPI. Okay, so if you found this breakdown helpful, please subscribe, like, share this video. It costs nothing and helps this channel grow. Thank you so much for watching, and I'll see you in the next one. And always remember to invest with intention. Bye bye.